Hello, my name is Adam Straseske and welcome to this week's market update for November 20th of 2017. Pretty exciting week, not only because it is Thanksgiving week, but there are a lot of things going on in the market right now. And so let's jump right into it. We've got our broad market readings and then our operating plan. So the first thing you always want to ask yourself is, are we in bear market territory? Are the bears or the bulls controlling the longer term? And the answer is the bulls are in control. We've got the all-world ex-USA index and the S&P 500 greatly outpacing Treasuries, represented by this red dotted line down here, on a 12-month rolling basis. So are we close to a bear market? No, we're not. Not even worried about it right now. As far as correction risk, a little bit different. You can see that the S&P has been trending up, while the breadth has been declining. So essentially what that means is less stocks are participating in the advance, although the index is posting new highs. So we have basically a negative divergence right here with the oscillator. But one thing to note that's fairly interesting is that if you'll notice, whenever this longer term oscillator has gotten down in this range, then we've seen a bounce in price. So we could have seen the bounce from this could be the bottom for the time being, but that remains to be seen. So if that's the case, then we'll probably see a breakout to the upside. As far as the stage of the S&P 500, we're still in this broad bull channel right here. Basically a neutral week for the S&P 500 last week, down 0.13%. This could be a possible bull flag right here, and really the thing is after you've seen all these bulls buy on this high right here in this tight bull channel, you got to think that they're not going to let it go down too much further before they start buying in again. So overall, still looks bullish for the S&P 500 weekly stance. As far as our operating plan goes, still like preferreds for our high yielder, and of course the MSCI All World ex-USA index, since it is outpacing the S&P 500. And here's our list of weekly swings, and nothing for the scalps right now. So for the All World ex-USA, down 0.73% for the week. Not a great week for the All World and frankly many of the international indices, but still looks good. Still have nice 12-month momentum, and we are waiting for a larger pullback to get more involved. But really, we're going to be bullish in this thing all the way up to a 50% retracement. Once that happens, it gets below there, then more than likely the polarity will change. And it could change before that. We'll just have to see. But really, as it stands right now, we're bullish on it until greater than a 50% retracement. Canada down almost 1% for the week. Bulls couldn't quite pull it off. They were right there to pull a new high. They couldn't do it, so the bears took over. We'll see if the bulls can get back in control this week and break it out to a new high. But we've adjusted our stop up, and we've got an original stop that was down here from the first time. UK down 0.65% for the week. Bear bar for the UK. This could just be a pullback back into the trading range, and so we'll see if we can get another pop to the upside, and then hopefully much higher from there. But right as it stands right now, we've got a second purchase range in here, and then a stop all the way down here. So plenty of room to move for the UK. Japan down 0.88% for the week. We were talking last week about the high tail right here, and you know it doesn't look bad for Japan. I mean, after you see all this buying again, you got to think that the bulls will step in and buy a lower price, and they certainly did. You can see how it bounced down and then bounced right back up. So the bulls are still in control here. More than likely, the best that the bears will be able to get is a trading range. So we'll see what happens there, but we've got our stop up here. No second purchase price. Oil down 0.05% for the week, basically a flat week, and it's just sitting on the top of that trading range, and so we'll see if the bulls can get control again and pop it again to the upside. But if it does fall back within here, we've got a second purchase in the bottom third of the channel. U.S. Treasuries up 0.83% for the week, and as you can see, we never quite got down into our bottom third of the channel. If it does get down there, then we'll look at purchasing it again. but right now we're just waiting for a pop to the upside. So it is. This could be just a tighter trading range, and good thing that we had an inside bull last week, bull bar, and so we'll see if the bulls can remain in control after this week. Australia down over 2%. Terrible week for Australia. They had a great opportunity, the bulls did, to raise the index to new highs. They couldn't do it. Bears took over and broke out to the downside. So we've got a second purchase range down in here and an initial stop down in here. Not really looking too good right now for Australia, but we'll see if the bulls can get back in control and hold it into this broad channel here. Still want to build in the all world, waiting for a larger pullback. And then for the weekly swing, we've got Brazil. Looking at this week for Brazil. So here's what Brazil looks like. We've got a nice broad bull channel right here. Broke out to the upside. Looks like a little bit of a double top. And then we've got a retracement. So we'll see if it can hold on here. If it makes here's a signal, and our trigger will be to buy above this bar. So we'll see if it gets it. If we do enter into the position and it falls below into this range, then we'll look at it getting additional shares. So we will go from there. Have a great week. Happy Thanksgiving, and we will talk to you next time.